Singapore may have a better chance of avoiding a recession this year, as analysts say the recent deal between the US and China could soften the blow for trade-reliant economies. Caitlin Ng takes a look at how this move will affect Singapore's economy and what to expect past the pause.
And they've agreed to open China, fully open China. And I think it's going to be fantastic for China. I think it's going to be fantastic for us.
A sigh of relief for global markets, with Singapore's benchmark Straits Times Index 2 inching up 0.1% at the close.
It's good news for Singapore's economy to the extent that disruptions will be fewer than they otherwise would have been. And Singapore is obviously a very trade-oriented economy, very much logistics driving the economy. And so to the extent that we see less of disruption for world trade growth, this should help Singapore's logistics sector.
The question now on everyone's minds, what happens after the truce is over?
If the tariff rates are going to be adjusted much higher 1 month and then going back to lower rates the following month, or having more flip-flops along the way, it may deter manufacturers or traders from conducting more business. So I think these are the sectors that may benefit, but these are the sectors that can also potentially lose due to the overwhelming uncertainty that we are seeing.
For now, analysts are sticking to their full-year forecasts of about 2% growth for Singapore's economy.
What's also still very much overhanging the global economy is the uncertainty that U.S. trade policy changes have injected into the global economy. So there's likely going to be a restrained investment activity in the global economy.
The good news is that the Sing dollar is expected to stay strong.
The recent move between the US and China will help to support both currencies. So I think they may have some slight recovery against the Singapore dollar, while the Sing dollar will still be expected to perform quite well against the basket of currencies.
Mr. Ng adds that Singapore still has to continue watching the fine print as the dust settles on global tariff talks.